Hi, this is Jack Duvall, CEO of Bantam Incorporated, a private investment office in New York. I wanted to do a brief video on central bank digital currencies, or CBDCs. And this complements a blog post series that I have, and you can find that on my website at blog.bant.am. So, first thing is that physical currencies, what they call M1, or actual money that you put in your wallet or your purse, have been on the decline for many years, since 2008. And that's true in the US and also in other countries as well. Now, that decline was well established before the spread of the coronavirus. And of course, that's another big negative to handling physical currency, because you don't want the potential, to have the coronavirus spread that way. And interestingly enough, back in March of 2018, so over 3 years ago, the Bank for International Settlements wrote a research paper, and they talked about the rise of central bank digital currencies and how this was going to be a part of our future. And in that, they highlighted a few things. Number one was the use of digital currencies in the settlement of securities and derivatives trades. So I did a quick check, and if you look at futures and options transactions only, so not securities, but futures and options contracts, they trade over $12 trillion, that's trillion with a T, in notional value every day. That doesn't include stocks and bonds. So there's just a tremendous amount of opportunity there for a digital currency. And just to be clear, when I'm talking about these central bank digital currencies, I'm talking about digital versions of the current currency. So you have a US dollar, there would be the digital US dollar, whatever they called that. And the same thing for yen and euro and renminbi. The other thing that the BIS noted was that cash was on the decline, and they thought that was going to continue. So the way I look at it is the central banks would love to have a digital currency, because in this brave new world that we're in, where they're sending checks out to people as a form of economic stimulus, like the $1,200 checks that they recently sent out, why not just have the central bank be able to write a few lines of code and the money appears in the next instant in everybody's account? That's a lot easier than mailing physical checks and sending debit cards to people, which is what they had to do the most recent round. So one of the interesting facets of this is that there is a very real potential for the disintermediation of banks. And the way that would work is every individual would have an account. If you were in the US, you would have an account with the Federal Reserve, and it would be at the Federal Reserve. And if the Federal Reserve wanted to give you money, they would just put it in your account. And in my blog post, I have a chart in there that I took from a Riksbank paper that they did on central bank digital currencies as well. And it shows it's very easy for the central banks to do this. And they are incented to do it because they can eliminate one of the huge bottlenecks that prevents them from stimulating the economy, which is this. The central banks, when the economy declines, the central banks will give money to the money center banks, which are then supposed to lend it out to businesses to stimulate the economy. What happens is the central bank gives the money to the money center banks, and they don't lend it out. They just sit on that money, and they earn a little interest on it, and there's no risk to it. So that's a bottleneck, and this is a well-known phenomenon that reduces the velocity of money and prevents the central bank from uh, helping to stimulate the economy. If the central bank can just put money in people's accounts, that's a direct way to stimulate the economy without having to go through the intermediary of the money center banks. So they, I think, are incented to do this. Just I want to note a few things that are happening now. Number one, China's has rolled out their digital renminbi, and that is live in 4 different cities. They're also paying some of their civil servants in digital renminbi. And although the U.S. doesn't have a digital currency yet, the Fed it has started to roll out this project called Fed Now, which is a 24/7, 365 money transfer service. Basically, you can think of it as like Venmo or Zelle or one of these, but would be through the Fed, where you could essentially transfer money at any time of day, any day of the year. Now, that could very easily be translated to digital US dollars as well. And then lastly, I just want to comment on the central bank digital currencies and how that interacts with cryptocurrencies like Bitcoin. I think it's unambiguously positive if central bank digital currencies become mainstream and everybody transacts in them. It's just going to pave the way for more adoption of cryptocurrencies. And I think that, if you look at it now, there's a very minuscule percentage of the population that owns cryptocurrencies. So even if you get moderate adoption, it would, I think, really increase the price of Bitcoin and probably most of the other cryptocurrencies, at least the big ones. And who knows how far that could go. But I do have a chart on the blog post that shows that Bitcoin made a 2 order of magnitude leap. It went from 200 to 2,000 to 20,000 in about 2.5 years. Of course, now it gave a lot of that back, and now it's around 9,000. But it's not inconceivable that Bitcoin could have another order of magnitude move or more, especially if it became widely adopted. So I hope this has been helpful. I'm Jack Duvall, CEO of Bantam Incorporated.